Welcome to Market Call. Thanks for joining us today. Marella Fernandez, Kim Bolton on the show. President Portfolio Manager Black Swan Dexteritas. He's going to take your questions on technology stocks. Here's how to reach us. 1-855-326-6266. You can also email your questions, marketcall@bnnbloomberg.ca. Kim, thanks for coming in. Good to see you.
Good to see you, Marella.
Oracle reported yesterday, as I'm sure you saw, that stock shooting up. I guess you own it. They missed some metrics in the current period, but their forecast and their guidance is huge, and investors really like that. Do you expect something similar from the rest of the tech industry for the rest of the year, or do you see some of that AI enthusiasm fizzling?
It's a very good question. For the hyperscalers, like the same thing happened with NVIDIA. Well, not, the backlog wasn't as big, but Broadcom, it got a boost of about, 14-15% that day. And then Alphabet blew it out of the water too. So, for the hyperscalers, yes. For the network providers, yes. The software guys, maybe not so much.
That's what I was going to ask you. Software, there's growing concern. AI is going to eat their lunch. What's your take on how quickly that is happening, and do you agree with the idea that software could become, less relevant?
It's sort of too early to say, I think. However, we've lightened up a lot on the software side. Mainly because the market has told us to lighten up. So, but it's the likes of ServiceNow and Salesforce and Adobe, the kings of the hill in the software sector. They're still doing very, very well. And actually, the ones that are doing the best are the ones that are actually embracing the AI. But it's still very, very early. And I still think it's pretty early for the hyperscalers, too. Okay,
let's talk about the hit of tariffs. Do you feel they've worked their way through in technology yet, or is there more to come? Because we still have the semiconductor tariff being threatened by Donald Trump, although he seems to be working out these side deals with the big tech guys to avoid that.
As long as he makes money.
As long as he gets his cut.
He gets his cut, yes.
So as a tariff sort of situation worked its way through tech, do you expect it to still impact tech moving forward?
I think it's going to carry on. Like, we're only 6 months into his tenure, right?
Yeah.
So we got another 3.5 years, and his operating memorandum is all about tariffs, right? That's how he sort of leverages and forces people to do what he wants them to do. It was a bit of a different angle when he started with Intel, and he got 15%, and so he's making some money. I think that's sort of pushing it a bit too far, and I wouldn't be surprised if, like a lot of the stuff that Mr. Trump is doing, the legal side is starting to weigh in and say, you've overstepped your authority.
But as you know and I know, legalities don't necessarily stop Donald Trump.
No.
He'll find another way.
Yeah. Okay, just like he's doing with the Fed, right?
So more to come is what you're thinking. Okay, we're going to take a quick break. We're going to line up the first of the phone calls for Kim Bolton, Black Swan Dexteritas, taking your questions on technology stocks. Here's how to reach us. We're back in a moment. Welcome back to Market Call. We're going to start with an email from Janelle. She says, what are your thoughts on CoreWeave? So let's turn to Kim and talk about CoreWeave for a little bit. Do you like CoreWeave?
I like it. We don't own it. It went public back at the end of March at $40. It scooted all the way up to 162. Then there was a temperature check, and it's back just sort of below 100.
Yeah, 190.
However, It has a lot going for it because it's very much involved in this networking space, and it's a massive company considering it. Just it only IPO'd less than 6 months ago, because it's almost $50 billion. But it's mainly in that sort of networking space, which is actually wasn't very crowded about a year ago, and now with the likes of CoreWeave coming in and Astera taking off and so on. So we do have a price target of 123. If it were to come down sort of into the mid to low 80s, we'd pick it up.
Got it. So you're keeping an eye on it.
Yeah.
Let's move to Michelle, who's on the line from Vancouver today. Hi, Michelle.
Hi, Marella. Can I get Kim's opinion on Spotify? Where do you see the stock going, and would you hold? Thanks for taking my question.
Okay, thank you for the question. Let's pull up the chart for Spotify, which, has generally trended up. I think I've got it here on the U.S. equity at 703. What do you have on? Do you have it up yet? Okay, we're pulling it up now. So, what do you think of Spotify as a company?
We own it.
Have for a while?
No, like Spotify is more like for us, is more like a sort of trading stock rather than an investment. But the reason we actually bought it more recently, like within the last 6 weeks, I'd say, is because they've really sort of embraced the AI side of it. So
in what way?
It's sort of like what Netflix is doing. So you bring in AI, you can actually customize playlists.
Okay, so if you like the Beatles going way back, it'll show you other music along the lines that you've already picked.
Exactly, and it can actually follow your emails. It can follow what you're listening to, so it can actually sort of deliver for you. Oh, that's Shopify. So Spotify currently.
Spotify, we did have up just a short time ago. Yes.
719. We have a 12-month price target of 749. So it's got about $30 left in it. But just back to the AI side. It's very much like Netflix. So Netflix is going to want to have access to your data, what your likings are, what the things you don't like, and then they can customize what they think. And it's pretty surprising when you look at some of this stuff, how they can actually think they can be like you before you actually think you are that. So if you know what I mean.
I'm going to have to take that one and mull that over a little bit, but you're going to hang on. You think there's room to grow for Spotify?
Yeah.
Got it. Okay, let's get to our next caller. John's on the line from London, Ontario. Hi, John.
Hi, Marella. Hello, Kim. Analyst extraordinaire. Kim, I have to thank you for Oracle. I have to also thank you for...
I guess so. It's a good day. It's a good day to thank him for Oracle, I guess. Yeah.
Getting me to stick with Google. You were right. They beat the rap, and they didn't have to sell Chrome. My question today is on AppLovin. I bought it on Thursday. I don't know, blind luck. It's doing well. It's doing well again today. Are you loving AppLovin? Thanks very much, Kim.
Okay, thank you for the question. Let's pull up AppLovin if we have that. Is this a stock that you've liked over time? It's 570.76, up 2.3% today. What have they been doing right? I mean, look at that 1 year. Up 561.5%.
However, look at the April low, because you had to have a very, very strong stomach through sort of March and April with AppLovin. So basically, AppLovin currently 570, and we have a 620 price target on it. We still own it, but with a lot of these companies. The analysts are having a very difficult time trying to keep up with their price targets.
Because so much is dramatically changing with AI?
Every day. And there are new relationships that are going on, new innovations that are coming out. And so AppLovin, what they hang their hat on is in the mobile advertising app monetization. So they help developers in the mobile space developing applications. And they help them develop their app, but then they also point them in the right direction of those kinds of advertisers that would have an appetite for them. It sounds very niche-y,
I was
right?
going to say, it sounds very niche, but clearly it's not.
But it's, yeah, and it's for, it's got a $190 billion market cap on it right now.
Pretty big niche.
It's, it's very big. Yeah.
All right, we hope
so
that...
620, John, good question.
Room to grow. Let's get to Jack, who's calling from Montebello, Quebec. Hi, Jack. What's your question today?
Hi. I took a position in Taiwan Semiconductor about a month ago, and I think it's gone up pretty well every day since then. And recognizing what you say about how difficult it is to do target prices in this fast-changing environment, I'm wondering if you do have a target price on Taiwan Semiconductor.
Even though it's hard to do, I'm sure Kim does have a target price somewhere in his back pocket. Okay, Taiwan Semiconductor, what are your thoughts?
So yeah, Jack, currently, what's it trading at there?
We have a 262, up 4.5% just today.
And, we have a 275, so it's not that far away. But what I find with a lot of these, trending stocks and the big mega caps out there, we've actually more recently moved away from the price target because we have so much capital gains in a lot of these stocks that we actually use trailing stops, sort of mental stop. We don't put the stop into the workstation, but and so with Taiwan Semiconductor, you can see right now 262, and you can see that sort of in that congestion area between sort of 240 and 230, and then it started to lift from there. So we have a sort of a mental stop on Taiwan Semiconductor of right around 230. If it rolls over and it goes under 230, something pretty dramatic must have happened out there.
Got it. Okay, we are going to take a quick break. We're going to be back with Kim Bolton, Black Swan Dexteritas, and your questions on technology stocks. Back in a moment. Welcome back to Market Call. Let's go straight to the phone lines. Michael has been holding. He's in Vancouver. Hi, Michael. What's your question today?
Hi there. Thanks for taking my call. My question's on Facebook. I want to know, number one, right up top, why did Mark Zuckerberg change the name from Facebook to Meta? Was it on the back of a microchip hit, or what's really happening? They're avoiding some sort of liability, obviously, but it hasn't been talked about, and their stock is in the tank. I don't think it's a good investment at all. I never did, but when it started, Facebook was good, but now it's in the hole.
Okay.
Not a good investment, I think. What do you think? Thank you.
Thanks, Michael. So the Meta thing is a little late on. That was quite some time ago when they changed the name. The stock's at 758-ish, and it is dropping today. So it's down sort of $7.80 or so. What has been happening with Meta? I mean, most people still believe there's room to run for this company, considering how much investment it's doing in AI and other things.
Yep. Here's a bit of trivia for you, Michael. So they changed their name, right, from Facebook to Meta. Interestingly, and I only know this because we have quite a few tech entrepreneurs as investors. So anyway, it was just down Spadina here that Mr. Zuckerberg bought a Canadian company called Meta. They were a software company, and he actually bought it, and the people actually moved to Cupertino, but he bought it for the name because he had this vision about the metaverse and everything, and he really wanted the name.
Which you never really amounted to much, right?
Yeah, well, you can sort of say that one of the reasons that Meta, Facebook, has done so well in this AI revolution is because they got involved in that metaverse. And so it was a sort of shorter transition, I guess, into AI. So currently, right now, trading just around
757.
Yeah, 757. And Michael, we've got a 12-month price target of 805, so we still have lots of room.
Okay, so if you hold, hang on, you think that it'll get a bounce from its AI expenditure.
So, in our top 10 holdings in our fund and in our growth portfolios, our growth separately managed accounts, Meta is definitely in the top 10. But those top 10, we just sort of rebalance. We hold on to all of the Mag 7, but then we have a couple of the networking stocks. So, but it's very, very much, in our mind, the pendulum in the technology arena has certainly swung to the hardware side. And if you remember, it was only, it was before the whole AI revolution, which was in November of 2022. Prior to that, it was all about software.
Yeah. Okay.
But now it's all sort of swung over, and it seems, based on the capex out there, that it's going to sort of stay on this hardware side.
Got it.
So Meta's in the place.
Let's move on to Alex, who's calling from Montreal with his question. Hi, Alex.
Hi. I would like to ask you about Qualcomm. What do you think about the stock at this time? Thank you.
Okay, thank you for that question. Let's pull up the Qualcomm chart and have a look at that. Is this a company you're invested in, Qualcomm?
No, but of course we follow it. And you can see it's just sort of stuck because Qualcomm was very, very much linked to Apple and to the whole sort of smartphone market. And a lot of the smartphone companies, be it Chinese or American, are doing a lot of their glasses and their chips and so on. They're starting to do them in-house. You could see it yesterday when Apple came out with theirs. How many times did they talk about their own Apple chips? And Qualcomm used to have it. And so we follow it. It's dirt cheap, but there's a reason for that. And there's just other opportunities.
They're losing some business.
Yeah,
Okay.
yeah.
Alex, I hope that gives you an idea of what to do as we move on to Margaret, who is calling today from Vancouver. Hi, Margaret. Margaret, are you there? Okay. Margaret's question was about Celestica. So we'll pull up Celestica and have a quick discussion about that before we take a break. Celestica overall is a company that you like, don't like. Have you invested in it in the past?
When I was talking about how we've sort of backed away from price targets and gone more to sort of trailing stops behind it, this is a great example. My goodness, back in April of this year, you could have bought Celestica for either side of $80, and here we are up at 343. Now that's on the Canadian side. So on the U.S. side, it's currently trading at around 338. Interestingly, the average analyst price target for Celestica on the U.S. side is $199, and it's trading at 338. So the analysts aren't keeping up with it, but for those clients of ours that still have Celestica, we just use sort of that trailing stop, and you can see it. And I had these conversations with clients. If they hold it, that 270 area is really, really key. So that's where it lifted off.
I'm still getting over the up 3,643% over 5 years.
Yeah.
Wow.
Back in April, it was burning a hole in everyone's pocket, and they couldn't get rid of it quick enough.
And so this is all in the last...
That was only 4 months ago.
I was going to say, this is all in the last number of months. Okay.
Yeah.
Let's get to another quick caller then. Tom's on the line from Milton. Hi, Tom.
Hello.
Hi, what's your question?
I just like to know your opinions on OpenTech.
OpenText, yes. Okay. OpenText, I believe, has a new CEO They are a Canadian company, I believe, and we'll take a look at sort of where the stock is. The stock's actually up almost 2% today, so up 12% on the year, sitting at 48.31. And I know they have sort of moved to trying to do different things with the company in an effort to sort of grow the business. But what's your take on Open Tech?
So right now, for just over 48, it's pretty evenly priced because we have a $49.25. Well, the street has it together with us. The average is of $49.25. So, Tom, if I were you and if you own it, I would actually look to write some calls against it. And you could probably, use a strike price of around, either $55 or $60. Do it very short, like 1 or 2 weeks, so you can still sort of hang on to it, keep your eye on it, because you probably don't want to get called away, but that's what I would do.
Okay, we hope that helps out Tom to plan ahead as we take a quick break. When we come back, Kim's past picks. Stay tuned. Welcome back. We are going to have a look at Kim's picks from September 25th of last year, so almost a year ago. At the time, his first choice was IBM on the New York Stock Exchange, recommended at $221 US. At the time now, to $259 US, 17% return, total return of 21%. IBM also, like many tech companies, really working at a turnaround here. Can you just expand a little bit on what they have moved to and what's going well for them?
Okay. So, they were all about mainframes and everything, right? And so they spun off a company called Kyndryl that took with them that sort of whole managed infrastructure service business unit. But then just around the same time, remember they bought Red Hat in the Carolinas. And that really put them in sort of the cloud and the data center business, which has saved them a bit. And if you go back over the last couple of years, the execution of the business plan was perfect. But then more recently, especially when in the Q2 earnings, they had to adjust a little bit, and it really came down to the execution. We've actually been adding to this right around sort of in the sort of 240 area, and we have a 12-month price target of 314.
All right, so if you have it, good one to hold on to.
Yeah.
Let's get to your next past pick from September last year, Cadence Design Systems. We talked about software, so we'll continue that conversation in a second. It was $271.80 US at the time you recommended it, up to $328.43, so 21% upside for a return and total return. And we talked about software and how AI might be sort of eating into some of that business, making it irrelevant. What about Cadence? What kind of software do they do? Are you worried about their future growth?
You're right. So there's 2 players in this field. There's Cadence, and then there's Synopsys. And maybe we'll talk about Synopsys later. But basically, they provide software services for designing anywhere from designing chips to even getting into designing various sort of networks to allow the chips to actually work together. Now, the elephant in the room is actually Synopsys. When they bought that British firm, and it just actually closed recently, and that's why Synopsys has taken off. But it's a nice business because if you're interested in software design services, these are the 2 players. And I'm surprised there aren't more. There are probably some smaller ones. But we have currently trading at around 350, and we have a 375 price target. We probably won't lose it at 375, but we'll probably put some call options around it. Yeah.
All right, let's get to Electronic Arts, your third pick from last
Yeah.
year. In September, 141.48 US at the time. Now up to 168.78, 19% upside, 20% total return gain. They're a video game software company.
Yep.
How's that space doing?
Fantastic.
Okay.
And if you actually think about it, you know, their main competitor, if you go back 5 years ago, was NVIDIA.
Interesting, okay.
Because remember, NVIDIA, they catered to the gamers for their GPUs. Then the whole crypto revolution came along, and they started catering to the miners. They bought Mellonix out of Israel, and now they're just NVIDIA's king of the hill when it comes to the GPUs. And that sort of left Electronic Arts, look at the franchise that they have. They have F1, they have Battlefield, they have Apex Legends, Sims, Madden NFL. So it's an absolute money machine. If you use the rule of 40, which is taking their growth plus their margin, and so the idea is that you should buy these sort of software companies if their rule of 40, the growth plus the margin is more than 40. For Electronic Arts, it's 94. So it's just an absolute cash machine, and you can see it when they reported back on July 29th. They beat in the top and the bottom, but then they raised their guidance. So
hang on.
Yeah.
All right. We're going to take a quick break with Kim Bolton sticking around. We will go back to your phone calls and your emails in just a moment. Stay tuned. Welcome back. Bob is on the line from Toronto with his question today. Bob, what is your question for Kim?
Yeah, hi, Marella. Hi, Tim. Tim, I'm wondering if you could give me your thoughts on Microsoft. I bought it a lot lower than it is today. I'm still making money on it, but it seems to be lingering around I think it's the $500 or whatever. It's just lingering around where the price is today. So I'm just wondering if you can give me your thoughts. Thank you.
Okay, it is at $4.99, as you mentioned, Bob, and it has dropped a little and started to go sideways. Any concerns about Microsoft?
No, not at all. It's just hold on. But, Bob, this is a perfect candidate to actually write some shorter dated calls against your position. And depending on whether you have enough Microsoft, you might want to sort of sell some calls, 5% higher, 4 or 5% higher, but then also sell some puts down below. And so you can make some income on both sides. And if you do get hit on the put, it's probably a pretty good buy.
All right, we hope that helps out Bob as we move on to Cliff, who's in Toronto. Hi, Cliff.
Good afternoon. The question is Arista Networks. It's another 52-week high today. The stock has doubled since the April sell-off. A very profitable tech company. I'm wondering if Kim owns it, what he would do about opening a new position, and does he have a price target? Thank you very much.
Another cloud networking company. We will pull up that line chart in just a second. Is this something you've invested in, continue to invest in at all?
Yep. Cliff, we actually added to our position yesterday. And we have a 12-month price target of 156. So it's right now trading right around 142. This is a space that has just gone gangbusters. It's just a little schooling behind it. So you have the likes of, the GPU guys like AMD and Broadcom and NVIDIA. I'm not quite sure what the percentage is, but there's a lot of unused GPUs out there, especially at the hyperscalers. And the reason for it is because they can't get enough of these routers and networking ingredients.
To make it functional.
Yeah, because, the GPUs are so powerful, but then to get more computational power out of it, you have to have the GPUs talking to each other. And Arista, Astera, Cisco, those are the guys that actually connect the GPUs. And that's why these guys have taken off. So, Cliff, I'd hold on, especially for these type of networking stocks. I would use that sort of trailing mental stop that you can have in here. So if you could just pull up the chart again. So 142, I don't know. It seemed to have sort of taken off when it went through 125, so I'd use that 125 level US as sort of a mental stop.
Okay. We are going to move on then to Mike after Cliff. Mike's in Kelowna, BC with a question. Hi, Mike.
Yeah, I have a small position in Synopsys. About a year ago, I bought it at $525. Now it's trading at $400. Would this be an opportunity to add? Your thoughts, please.
Okay. Remind me what Synopsys does.
This is the other competitor to Cadence.
So connect out to Cadence.
Yeah.
Okay.
And so they just finished the acquisition of what was the third largest of the designer software firms out there. So I would actually, Mike, I don't know if you get involved in the options side, but I think it's a great place to actually buy it, but maybe you can get...
Why is it drop there? We've got a drop of 35%, essentially.
Yeah. That was on the reporting.
Got it.
And they're having some digestion problems on the acquisition that they just sort of came in with. There were high aspirations. The report actually was quite good, but the sort of whisper numbers were a heck of a lot higher. Mike, I would actually sell some puts in here, just a little bit lower, so you can get some income. And if you get hit at your strike price, then you're buying a little bit lower.
Mike, hope that gives you a strategy moving forward. We're going to take a quick break, line up some more of your phone calls for Kim Bolton of Black Swan Dexteritas. He's taking your questions on technology stocks. Here's how to reach us. We're back in a moment. Welcome back. Thanks for joining us on Market Call. Dominic has been holding on to the line. He's in Montreal today. Hi, Dominic.
Yes, hello, Maria. Kim, thank you for taking my call. About Marvell, it seems a good value here, but it stays at a good value, and some people are wary about technology stocks that are at value. I have been trading some options to reduce my dollar cost average on it, and I just wonder how you feel about this company, the stock price, valuation, and a future. Thank you.
Thanks for the question. Marvell at 67.38. And got hit in April, never fully recovered, obviously. What's been the drag on the company?
So what Marvell is exceptionally good at, so they're a hardware company, is in this thing called edge computing. So it's actually taking the computational power, instead of it residing in a data center or in the cloud, they actually take it out to the edge in devices. So in like smartphones or iPads or whatever. Now, Dominic, we decided not to write some calls against it because it's pretty darn close to its price target of $75. So we actually took profit on it just yesterday. And then we sort of rotated, and I know this isn't sort of in the same thing, but you're probably wondering if you're going to sell it, what'd you buy? So we bought Figma, which is actually an AI software company. It just zoomed up, but it came back down. We bought some of those modular nuclear reactor stocks, SMR and OKLO, and then we just sort of added to some of the Magnificent Seven. But Marvel was one of the ones that we sold just yesterday.
Okay, let's move on then to Glenn, who is calling from St. John's, Newfoundland. Hi, Glenn. What's your question today?
Yes, hello. And thanks for taking my call. I wonder if I can get your opinion on Vital Hub. I got in probably in the just under $9 range earlier in the year. Canadian small cap in the health sector. And I was just wondering what you might think of it. And I'll just hang up and listen to your comments. Thanks.
Thank you for the question. Tell me about Vital Hub.
So Vital Hub, as you were saying, is in the healthcare side. And it's a software as a service company. And it does reasonably well here in Canada, but it's very difficult to compete against the likes of Oracle once you move sort of outside of Canada. So Oracle bought Cerner a year and a half ago. And they're sort of the king of the hill when it comes to the software as a service in the healthcare technology space. Currently trading, I think it was around $11.50. And we follow it because some of our SMAs, sort of legacy, have it in there. And it's got a 12-month price target of $14.70. So it's worth holding on.
Let's move on from Glenn then to Trava, who's calling from Mississauga, Ontario. Hi, what's your question today?
Hi, thanks for taking my call. My question is about Oracle. Would you consider Oracle to be an investment-grade stock at the current levels? Also, what risks should investors keep in mind? And the growth prospects and the valuation comparisons as well, please.
Okay, so
Thank
Oracle, which did just report on missed some metrics, but that guidance really was very much embraced by investors, so shot up the stock. Would you buy at this point, or would you wait for the pullback?
So we went into yesterday with about a 6% position in the fund and sort of across a lot of our SMAs. And so it's now just above 8%. We probably will not trim it until it gets, between 9 and 10%. It's not sort of rolling over. If anything, the only problem I had with the report that came in last night on Oracle, they should have reported before that they were going to have this massive backlog. Right? Because the street actually had them at $155 billion of backlog.
And it was twice that, wasn't it?
It was $460 billion. A lot of people say, this is going to be a moment in time that people will look back. But isn't it interesting? Like, I look at Oracle sort of in the same lens as I look at IBM. Both of them were sort of legacy technology stocks. But then they, the light went on and they got into the cloud business and the data center business. And then, we are holding on because it deserves to be up here when, their backlog was it was 360% more than what was expected.
Trava, we hope that helps answer your questions. We are going to take a break, and that's all the time we have for phone calls, but new topics from Kim when we come back. Join us tomorrow for Market Call. Martin Cobb on the show, Senior Vice President of Equities at Lauren Steinberg Wealth Management. He'll take your questions on U.S. and Canadian equities. And in what is shaping up to be a major mining deal, one of the biggest in the past decade, Teck Resources has agreed to a takeover by London's Anglo American. Teck CEO Jonathan Price calls this a hugely compelling opportunity for Canada. We'll hear more from him on the deal at 3 p.m. Eastern Time. Time now for new top picks from Kim Bolton, and we'll start with Honeywell on the NASDAQ. Honeywell is a company, it's very well known. I mean, people know the name Honeywell, but what do you like about Honeywell moving forward?
They've been around for like a long time. And remember, they merged with Allied Signal, and so they're out of North Carolina. There's so many moving pieces in this puzzle with Honeywell. And it's actually got a decent runway. So it's right now sitting at 212. We have a 12-month price target of 253. Now, what's going on? So Elliott Management, you know, the hedge fund, the activist, came in, took a position, and then as Elliott does, they're trying to force them to break it up. And so they've gone along with it. And so they had 5 divisions. Now they're going to have 3 divisions. The biggest one is the aerospace, which is sort of cyclical. But then the second one is Honeywell Automation, which is very much sort of in the renewables, energy, and so on space. And then sort of their AI play is in this division called Honeywell Honeywell Advanced Materials. Now, the Honeywell, it's pretty small because it's like 3 or 4% of the revenues go into that Honeywell Advanced Materials. However, they just, a couple of days ago, announced a deal, and they are now the largest shareholder in a company called Quantinium, which also happens to be the second largest shareholder is NVIDIA. And so they're a significant player in quantum computing out there. They reported back on July 24th. They beat on the top, beat on the bottom, they raised the guidance. A lot of people are sort of shy because they're not sure, you know, when you split up a company like this, you sort of wonder what you're going to get on an average cost basis and what's going to happen with the dividend and so on. But I think it's going to go fine. We've been adding to this more recently. And as I said, we have a 12-month price target of 252.
Okay, let's get to your next top pick, which is Palantir, software company, again, a well-known name. We get asked a lot about it. Palantir, are you invested? Are you adding? Where are you with Palantir?
Well, you can see it came down there from sort of the 185, 190 level. And so we've been buying all the way from sort of 140. We added to it again yesterday. And we have a 12-month price target of $180.50. So I have an analyst in Silicon Valley, and Yuri, I talk with him every Friday. And as he has taught me, if you want to know what's going on in Silicon Valley, you follow the people, you follow the smart people. And so the place to work in the AI business is Palantir. And it's almost like an intelligence group. They originally started out with the Gotham side of it, which was geared toward government contracts. Then they got into the Foundry side, which was more enterprise, and it's sort of split 50-50 both ways. And the reason it's so popular, and the reason it's got a $363 billion market cap on it, is because of the total addressable market is massive. But then, what's his name? Alex Karp is the CEO, who is a protege of Thiel. And so he's just one of the smartest guys in Silicon Valley.
Okay, we got to move on to
Okay.
get in your last pick because we're running out of time. Uber is your last pick, very well known. Is it the food side of Uber that you think has some growth here, or they're moving to self-driving as well? Partnership, Sarah?
We've never bought it, actually. But then when we started getting into it, just the financial metrics on the mobility, on the delivery, even on the freight side of things, that rule of 40 is, they're sitting at around mid-60s on that. So we have currently trading, $91, and we have a $112 price target on it.
All right, Kim Bolton, I got to leave it there with you. Thanks for coming in. Good to see you.
Nice to see
and
you.
Thank you for watching Market Call with us today. We will see you again tomorrow.